Alright boys, back in action. Got the new computer running. Trying to set it up now to same sort of settings I had before. A little bit hard to remember all the little intricacies though, that's why we're a little late today. But we're basically back up and running now. And it's much better. Oh my god, I hate using little screens and I hate using I hate having no access to all the charts that I need. And being able to see them clearly, yeah. And just better. I mean, and faster computer. So everything's sweet now. Except for maybe the sound. I'm not sure about the sound. Yeah. I just put my my little Japanese toys up there in the cupboard. Yeah, yeah, this is the old computer set up on the other desk. So we just got the new computer set up here on this new desk. I mean, but I'm just so relieved that everything works. It was it's made a big trip, over 1,000 kilometers to get down here. But you all came here to talk about the markets, not my computer setup. Right, so very interesting price action here on Friday. The really weak US data did not lead to this US dollar sell-off that you would normally predict. In fact, it's actually very dangerous here on the Aussie. So, you know, I would have had this update maybe 10-15 times today with different clients about what's going on with Aussie. Alright, there's a few things. First off, you know, no trend goes in a direct line. Yeah, and I know there's been overwhelming support for the Aussie on dips, and overwhelming support for the Aussie even after economic data has been weak, after news stories have been weak, and after they cut rates, right? So I can understand why everyone's got very bullish, that they think the market's going high. Look, so do I. Right, that doesn't mean that we're not a little bit overbought and we've got some profit taking to churn through and some potential downside inside this uptrend. Right, if you're looking at how the market goes in an uptrend, it usually goes in what you call a trend channel, and the trend channel is sort of like the lower end of what you would say the trend line would be. And if we're looking at daily, we're smack bang in the middle of that. We can go back down to the mid 75 50s and still be within this trend line. Right, so you're not being a cautious trader. You're not being a stupid trader by letting the market have some days off in the buying. This was actually quite a relentless buy up, but this price action in the last 2 days since Thursday last week, where it tapped out twice above 77.50, came back down, had some very weak data on Friday, spiked higher, then got reversed to new lows on the day. That's incredibly short-term bearish signal. All right, so even though we're attempting to rally again today, and we had some very strong oil news out earlier today, which is helping the Aussie in the sentiment, and just generally, you know, there is people looking to sell the US dollar. It won't surprise me at all if we have a few more legs down, and the level I'm looking to buy in is around about 75.80 to around 75.50. Okay, that's my level. This is not an Aussie-based phenomena. You know what's going on here with the US dollar. Even though there's expectations for it to be weak, you're seeing a fair bit of strength against all the commodity currencies. In particular, the Kiwi dollar looks very similar to the Aussie dollar. Oh no, I don't have the Kiwi dollar. Alright, let's add the Kiwi dollar. Turn that off so I don't trade. Kiwi. And we'll bring up the Aussie Kiwi as well, just because we're going to be talking about that in depth today. So Aussie Kiwi is my trade of the rest of the year almost. So we'll be talking about that a lot with you guys. Alright, so the Kiwi had its own version of the Aussie sell-off. In fact, a little bit more dramatic. It just doesn't look like it, given it's bounced back a little bit more. and has held those gains. But if we're looking at this this pullback here, this is after the RBNZ cut, and then we made significantly new lows, and it's like, well, is the sell-off over? And potentially not. All right, if the Aussie's not, then maybe the Kiwi's not, and it seems like the pain trade here is for the longs, and the longs are a little bit worried if you bought into the high 72s that you're ever going to get out of this, and you know they're probably taking profit here on this bounce. So we'll see if this rolls over again for another leg lower. I'm liking the low 70s to buy the Kiwi, and expecting that hunt for yield to come back in. So you know, even though I'm very bullish on these pairs, I can appreciate bearish price action. And if we get another roll over here, then more selling will come, and it might be that final little leg lower that we get that clean out of those weak longs. And that's what you would call this. The weak longs that bought too high, thinking that the market's just going to go one way after that. Now, if we get higher levels, you know, higher than, say, that spike on Friday, then we can talk about just going straight back in at some point into the uptrend. But there's no reason to buy here. This is super dangerous, guys. Super dangerous. Just avoid it until we get some clear indication that this little mini sell-off is over. Same with the Aussie. Alright. So look, if the market does rally, the clients will be upset, but if the market pulls back, you know, I've done my job, really, which is to protect them in those dangerous situations. There's every reason to be bullish here, but just not at the current level. Alright, so how's this playing out in Aussie Kiwi? Well, the Aussie Kiwi, and we'll give a little bit of background on why we're in this trade. Aussie Kiwi made a pretty substantial low here. Did a little bit of whipping around inside in this range for a month, and then half broke out to the top side, then broke out to the bottom side, then came back down, and then post the we started to see some heavy RBNZ base selling. Okay, and the market's all getting shredded here on the Kiwi. Then you saw that reversal in the Kiwi dollar. All right, then you saw the RBA come out. All right, the RBA come out. The market sold off briefly and then started to rally. All right, and we saw nearly new highs here on that relief rally here of the Aussie. But this is an important bottoming level. All right, this is 105. This is where the market's been for the last, you know, almost 2 years, trying to form a bottom. And the range is pretty well defined in here. But in terms of, if you're looking at history, okay, this pair remains within, oh, it doesn't go back far enough. Okay, alright, that didn't help. Well, just trust me that it stays between 105 and 130 90% of the time, okay? And we are at 106. We've tested 105, bounced back up. RBNZ is more likely to cut than the RBA going forward. So every chance here that we get a reversal with inside this bigger range from this, you know, traders looking at this 105 level being put in as the base, and then we get a reversal back up. This is not right. What's going on here? Wait, computer. Stop being ridiculous. And then we get a reversal back up to that 112, 113 level, where we initially were hoping that the market was going to bust that 115 level. So my target here for December is 115. I think as the RBNZ get more aggressive, and the Aussie plays catch up, that we'll see this break higher, break back above 108, and then really it's just a slow grind higher as this starts to outperform. Right, that overhang of more RBNZ cuts, I think, is going to be the linchpin here. And once we get some technical action to back it up, that this pair would be starting to trend nicely. You know, it's a pair which does trend nicely once it begins. And so if we can get this move, you know, sort of similar to that, that was pretty aggressive actually. But if we can get a similar sort of move to that, that would be fantastic. That'd be what I'm looking for here. Past 108, just very sharp price action here, probably as they're going into an RBNZ rate cut announcement, or they start talking about intervention over in RBNZ more loudly. Either way, right, I don't care what happens with the US dollar on this particular pair. I'm just saying that Aussie dollar is going to outperform. So I'm looking for, going lower in, I'm looking for inside this sort of price action that we've seen. I'm looking now to buy in the low 106s. Even this level's fine. Okay, and just for us to head higher over the coming days and weeks, break that 107.60 level, then start that trajectory up. Now, we may not get that sort of price action. We may get a move back towards 105. That's fine. I'll buy a second piece of the pie here. If we break underneath 105, I will start getting neutral. Yeah, I'm not going to be too aggressive. There is some banks out there expecting us to go to parity. I think that's going to require an extreme set of circumstances, but it is possible. It is possible. And believe it or not, this is actually one of the most favorite trades out there among semi-pros and savvy, like professional traders. So that doesn't help. Everyone can't have the same trade idea, right? Actually, it pisses me off when I see people and traders like Joel Kruger and Sean Lee and a few others talk about long Aussie Kiwis, because if it's too easy, it sometimes doesn't happen in the way you want it to happen. It's probably still going to happen at some point, but a clean out to the downside of these longs before a sharp rally topside is definitely possible when you have this sort of consensus forming of which way this pair is going, and you can just see on the charts that there's so many technical reasons to be buying up here as well, after these sharp rejections to the downside, that maybe it's not going to be as simple as we think. All right, but I'm still involved here, about half my normal size, and I don't know on the stream account where I've got one, but let's bring it up and get some just in case we haven't. All right, so these levels probably worth half. Half a standard trade, so that's half a lot. We've already got a little bit though, so I did get some last Friday. Good. Gonna have to get these templates right, guys. Sorry about that. Drives me nuts when I don't have my standard template. I'll change it properly later, but here we go. So yeah, we're going to buy a little bit more. And trying to just... Look, there is a chance we go range trading here. Either way, we'd still be making some pips, right? The scenario where this crashes is hard to see. It would be a China-based story if it does crash, that specifically takes down the Aussie, or some sort of local story that gets out of hand here in Australia. Alright, but I'm still very happy to be long here. I like that trade. That's my fundamental sort of trade. And if I start to see it working, I'm adding to that trade. So hopefully we do get that in the next month, right? So I can show you how to add to a trade, how to make a lot of money off one trade idea. Because that's something that you have to learn to do as a trader. When you get something right, start punching it. And you're seeing that from Kilimanjaro is on this sort of trade as well. He's been on Aussie Kiwi for months, and there's a reason for it, because it makes sense to a lot of big traders that this is going one way only over time, so buy every dip. Yeah, so but that's enough of the Aussie Kiwi. The other trade that we got in on Friday was we sold some dollar CAD. Fantastic. Then we got some excellent news about secret oil meetings. No. We've got some excellent news today as well to continue the oil rally, which was Novak, the Russian oil minister, talking to Saudi Arabia oil minister, or whatever he's called over there in Saudi Arabia, and suggesting they'll make tangible results in meetings to implement measures to stabilize the oil market. All right, so nothing concrete, but doesn't really need to be much concrete. Market's ready to rally on that sort of news anyway. We're getting some profit taking as long as we continue to get buying on the dips here on the oil, and can break back into that previous. Yeah, we're almost there. Almost there. It's hanged out above 46 for a long time. Or if we can get back above 46, then I think that the Canadian dollar still has that catch-up. That catch-up play that we've been talking about is relative underperformance of Canadian dollar compared to the Aussie and the Kiwi. And where we should be is low 128s. We've made some substantial moves, in the last 3 or 4 days, though, as oil's really broken higher. Spins we've been selling since 131, but we have been taking profit too early and getting out of trades too early based upon some reversals, but it's starting to begin to be technically on our side as well, and so to the downside here makes a lot of sense. And so this is one I'm going to hold until we get down to the low 28s, and if it's developing bullishly enough and the US dollar is getting some weakness, then I'll let this hold maybe to 125. Yeah, I really like this trade. I really like this potential of this trade. But yeah, low 128s is the initial target, but I see potential here to the low 125s, just retesting that previous sort of cycle low. Now, it is all to do with the oil though, and just general US dollar sell-off. If we don't see that big US dollar sell-off, then 128 is going to probably hold. To check whether we're going to have that big US dollar sell-off, we have to be looking at the euro. And the euro is having many false starts here, not giving us what we want. Really frustrating me, actually. We tried to buy it that day, got a little bit, came back down, spacing out a little SPAC higher, plus 112, but did not continue on. It's really struggling to break out of its range, but it is grinding higher. I mean, it is edging higher just generally here. We really have to get now, past 112.50, hopefully this week. Otherwise, there's going to be a lack of direction against the US dollar in general. The theory is that we go past that 112.50 whilst the dollar yen is breaking 100. It makes a lot of sense. Okay. That's what I'm looking for here in terms of the pathway. Okay, so how does that happen? Euro rallies, oil rallies, dollar yen makes an attempt on 100. Whether it breaks or not means whether we get this huge fast sell-off. If it just meanders around and does a couple of false breaks, that's fine. That may allow, if we've already got the damage done on the euro, then the euro can continue by itself with the pound and the Aussie and the Kiwi. Hopefully we get into a bit of Aussie and Kiwi. I'd rather be long Aussie, Kiwi and euro against the US dollar than selling dollar yen or buying, say, the pound. The pound is not a reliable partner in this mission. There are some who say, well, it's got more potential to the top side. Well, that's true. Okay, but every rally is getting reversed faster than almost any other pair. So the pound's decimation needs a catalyst to stop it. Yeah, and the short covering is just not covering it at the moment. This US dollar rally sell-off has not had enough continuation to start a short covering frenzy in the pound, and the pound's just every rally people are happy to sell the pound. Yeah, the buyers. Who buys this right now? You're buying this right now. You're getting out after 50 pips because it's like you can't trust it. You can't trust it to have a sustained rally. So until we get some bullish price action here, just leave the pound alone. If you're selling, I sort of understand where you're coming from because it is super weak, but yeah, I can't do it. It's just too low. It's just too low for me, and I just don't want to, put a gun to my head, I'd sell, but I just don't want to get involved and get caught. Because you can imagine yourself rationalizing into averaging into a sell position here on a rally rather than cutting. And if you can see yourself getting caught into a scenario like that, then it's best not to get involved in that pair. The main entry I'm looking for right now, though, in the way I'm going to be playing this whole plan to sell the US dollar, is with the dollar CAD, and I'm looking to sell every rally. and I don't expect it to see it back above 130, and that's the main way there going forward. All right, so you can sell just at say 129.60, stop at 130.20, and looking for that 128. Good risk reward, 60 to make 160, 170. Also, looking to buy the Aussie if we get down to 75.80, which is substantially further away than at the moment, so no reason to rush. We do have some data later in the week for the Aussie. Not a big data week, the third week into the market, but we do have some Aussie data that's coming Thursday, unemployment numbers, so tier 1 data, important. Alright, just let me check the questions, boys. I've been ranting for a while now. Holy shit, imagine if you don't like to trade the Aussie Kiwi. You're like, can this guy stop ranting about Aussie Kiwi and Canadian dollar, please? I just want to trade the pound. And he gives us nothing on the pound. Except for warnings, don't trade it. Yeah, no, look, I don't know, man. A lot of you like to trade the crosses here. That makes sense. You're buying Aussie versus the pound, even if the Aussie goes down, the pound goes down more. So, pound Aussie falling. All right, but that pair, how do you sleep at night? How do you sleep at night when you can move 300 or 400 pips on you? You basically need to have someone managing your trades during the sleeping hours. So most of us can't do that. So at these levels and at this extension of the trend, and we're talking about the pound Aussie, where are you? Pound Aussie and pound Kiwi, just imagine are the same. We're quite low in this game. Yeah, so yeah, we could have another 500, 600 points lower, but it's just, if you're wrong in terms of the timing on this trade, then you could get stung pretty bad. And you can't use a small stop really on this trade. You have to let it breathe a little bit, so that at least 100 pips probably anywhere you enter. And I don't know what you're targeting on the downside there. It's just, yeah, okay, it's in a downtrend, but I'm not excited by it. Pound CAD makes more sense. We have some cleaner levels that if we break, it might be a more follow through. I mean, it's probably everything's going to break to the downside, right? That is just the likely scenario here. Pound Aussie and the pound CAD and the pound Kiwi. But you never know. Yeah, so you can't sell it now and then go to sleep and see what happens in Asia, right? So if you're an Asian trader, that's a problem. Perhaps if you are sleeping during the Asian session, you can trade this pair a little bit more aggressively. But the pound CAD, maybe not the pound Aussie, if there's Aussie data. But yeah, good luck with you if you're in that trade. I'm just going to stick to some of the easier ones at the moment. Don't get me wrong, I love selling Euro Aussie. Euro Aussie is one of my favorite pairs to sell. But we're too low. So Euro Aussie, where are we here? Euro Aussie found support again. It's a stubborn one too, down at the 144 level. Tomorrow I'm gonna have templates ready, guys, so we're not gonna have to do this, but today we have to. Alright, so that 144 level held again. I'm more interested in this Aussie dollar sell-off happening at the moment, and this Aussie dollar sell-off is pretty substantial. It has got another 100 pips, potentially. So I was talking about where I'm going to buy the Aussie. If the case is I'm going to buy the Aussie at 75.80, that's going to translate to a probably 147.50 Euro Aussie trade. And so that's why I'm waiting off on this particular pair. I do think we're breaking lower. That's fine. I just think it's a little bit later. And we've got to get past that speed bump, which is going to be that Aussie data. And the Aussie unemployment data is notoriously unstable. Our Statistics Bureau is just terrible. Sometimes we get variances that are like, if it was the US, no joke, if it was the US, the number that you would be talking about would be like 1 million. And then the next month, minus 200,000. That's the sort of variance that we're getting in Australian jobs. So it is hard. They have made some changes, and they are saying it's getting better. But I just the thing is, right, when the data comes out so bad or so good, the market ignores it. It doesn't actually react to it like you'd think it would. The market puts it as an outlier, and there's very little follow-through trading on it. So that's a funny thing to know about the Australian data as well. So if it did come out at 100,000 jobs, which is equivalent to 1 million jobs in the US, last time that happened, the market did not buy aggressively on it. They said, well, this has to be a mistake, which is pretty interesting, right? That the logic doesn't lead to that follow-through automated buying. All right, but if we can get that 147 level, I would be interested in this particular trade. All right, so yeah, time for some questions and look at a couple of these trades in the trading room. How's the sound, guys? I should have checked that out earlier. Head like a tomato, I'll kill you. Hey, it's looking pretty red, isn't it? I'm drinking coffee. I don't know. Got this damn English skin. Gets all red all the time. I'm not even eating anything today. Crazy. But yeah, no, I haven't started drinking today. So could be anything, hands. Hands, you bastard. Okay, pound yen. Probably one of the most common questions I get asked as well, because everyone likes to trade pound yen. No filter, man. I swear, there's like this crazy program. I had this program that popped up earlier. I'm not sure where it is gone. It was like a Cam's effect little thing come out, and it was quite ridiculous. Must be inside that Cam. I don't know about that. Yeah, so I'll find that anyway. Change it, filter. What is this? This is not Instagram, mate. This is not Instagram. Although I should shave. So pound yen. Sorry, guys. Back to the subject at hand. Pound yen is. People ask, what's the bottom of it? If you want to go to war, where can we get to? And you're probably looking at 125 on the pound US dollar and 95 on the dollar yen. And if we do get that, right, that's going to bring you to around about 119. if you're doing the maths on that, and 119 is actually the pretty much the all-time low. Okay, so if we get 95 on the dollar yen and 125 on the pound, which is very possible, then this can fall another 10 figures, another 10 big figures, all the way down to this 119, and the previous really big lows was 118 on 1750. Okay, so that's really the bear's big target. Anything below that, you're sort of crazy. Right? You're sort of crazy. Because where's it going to come from? The pound, dollar yen going to 90 means extreme US dollar weakness. And to get the pound to fall without taking advantage of what's going on with the dollar weakness from the dollar yen sell-off means there's no short covering rally in the pound. So it would take a pretty extreme scenario where the pound yen doesn't find support at some point close to 120. Basically the pound has to not react to the US dollar weakness, which is just how's the dollar yen going to get to 90 if there's no US dollar weakness? You know what I mean? It doesn't make coherent practical sense. But some sort of trending lower slowly over time, where the pound does short covering rallies and the dollar yen slip below 100, and the pound just does rally when the dollar yen's falling, but not much, and the euro does most of it, and that means that the euro pound will be rallying. That means that if that's going on, the euro pound's getting to 90, and the euro pound to 90 is not crazy talk. Euro pound to 90 is pretty reasonable. Then euro pound to 90 would potentially put that pound yen back near that 120. Okay, so that's how that happens. That's so yeah, you can go to war if you are prepared to sort of have 1,000 pips. If you're the type of trader that won't take a stop, 1,000 to 1,500 pips should be enough per trade, which is a fair bit of equity. We're talking about 10% equity, 10 to 1 leverage. All right, but some traders like that. Some traders like to buy the currency extremely low, and make no doubt about it, pound yen is extremely low on nearly every metric, right? We've come from 550 back in the 1980s down to 130. All right, so yeah, it can definitely fall further. It's likely to fall further, and any sort of rally is hardly going to be sustained unless you get a good reason, in my opinion, like improving UK data over the next couple of months that might sustain a rally. A sustainable short squeeze, I mean. The uncertainty from the Brexit, the uncertainty from the French elections next year, probably going to keep this baby capped below 140 for a while. But the pound has a way of surprising everyone. And you can sort of imagine a scenario where the dollar yen's rallying and the pound yen wants to rally again with it. Sort of like when the dollar yen did its big rally to 107. The pound was like its best partner in crime in that rally, and that helped the pound rally with it. So the pound yen did its double movement based upon the pound moving and the dollar yen moving. So you got that huge reversal here in the pound yen. Let's bring it up on the 4 hour. Okay, so that's 12 big figures while the dollar yen's rallying, and it held its own while the dollar yen was rallying. There's some big moves inside that. So it's I don't know. It's not a safe buy yet, guys. It's not a safe buy. It's probably wrecking a lot of accounts, and those accounts are praying it doesn't go down. And that sort of scenario you rarely get out alive. So if you got stops just below 130, you need to pray harder, because it's coming. selling it with trailing stops is probably safer if you're selling it, just in case there is that spike higher on some sort of random news. Yeah, Nick. OCO. It's not an OCO. It's a deal cancellation trade. So it's basically a 1 hour option linked to your day trade that allows you to close at zero for the 1 hour, and you pay that premium that the option would be worth for a 1 hour option. And because the 1 hour option is really, really cheap, you end up getting away with a trade with this 1 hour ability to close out for costing you around about 10 pips. So the current market, we can have a look at a particular trade idea now. Let me look at which pair we'd want to play. It's something I better do at the start of the stream, Nick, rather than the end of the stream. But I will just quickly bring it up, and potentially tomorrow we'll do one, yeah? So this is a new initiative. We're a full service broker, the broker I work for, and they've just announced that they're doing this deal cancellation. It's still in soft launch, so it's not available to everyone, but if you have an account there and you talk to me, I'll get it opened up on your account. Oh, TradeAlerter. Actually made money. Can't trade anymore. Okay, so say we're looking at the pound right now, and we've got about a quarter lot. I'll be able to buy with deal cancellation, pay $40, and for the first hour, first 60 minutes, I can close that trade at zero. Alright, so let's buy. So I've got this trade down here with deal cancellation on it. It will tell you how many minutes you got left. If I close it now, the loss will be zero. But I did pay $38 for it, so I would only probably use it if it went a lot lower. Okay, during the first hour. But given that you're down the spread anyway, right, from opening that trade, then effectively, if you close at zero, then you've paid with zero spread on that pair. So that detracts from that cost. So the cost ends up being a lot less than it looks here. It ends up being like $25. I don't know if this is a good time to use it. It's just that we're using it right now just to show you. But yeah, this is basically a really short-term option, and if you want to learn to trade options, that's something that they do here. So options are like puts and calls. Now one day we'll go over that with you, and that's an important way to make money as well. Okay, so if you're going into an announcement, it's a pretty good tool to use. If you're going, trying to pick a bottom and a top, it's a pretty good tool to use. Just day-to-day using, I mean, there's not many opportunities unless you're going against a trend that you want to use it straight away, because there's an extra. It's like trading with 10 pips rather than 2 pips, right? If you're trading with 10 pips, then you better be sure that you're going to get your return on that 10 pips, right? But if you're buying the dip into dollar yen at 100, it makes sense. If you're selling 80 on the Aussie US dollar, it makes sense. Just adding those extra little bits, just because if within an hour you should know if this pair is going to hold or not. So just giving you time, basically. The other thing it helps you with is if you want to follow a trend and you're scared that you've gone too late into the market. Alright, so dollar yen's falling and you're worried there's going to be reversals, but you do want to get into the market with the trend. Alright, so you can sort of use this to make sure that the market goes back to trend, pay the 10 pips rather than the 3 pips, and you if the market goes back to trend, then you should end up making more than 10 pips on that trade anyway. Alright, but this is not the best example either, but there's a few out there where it does make sense if you know what I'm talking about there. Say the euro is rallying and it breaks at 112 level, you can sort of use this deal cancellation to and this is very cheap because the euro hasn't been moving. This is only $28. That's less than 10 pips. That's like 8 pips. If it's breaking 112, you can sort of buy with that deal cancellation. If it breaks, then it's going to continue to go higher, substantially higher, right? If it doesn't, then the most you can lose in that first hour, and you should know within that hour, is that 10 to 15 pips, depending on the volatility. Alright, so it's an interesting tool. It's a very interesting tool, and no one else has ever made it yet. It's just that these guys do their own options, long-term options, and they thought, well, we can do it down to 1 hour instead. So it is an interesting product. I'll use it sometime on the stream, just to give better examples of it. Nick's always in the business. So Nick's a good man, actually. So Nick's he's an IB with Easy Markets, and so if you do introduce, if you do go with him, then he'll be able to help you out if there's any issues. I'll be able to help you out if there's any issues as well, especially if you're in APAC. Alright, so let's finish up with a little bit of data though. Data check. We do want to know what's happening in the markets, what's coming up, what the banks are thinking. Sometimes we just want to know what the banks are thinking so we can go against the banks. If you're one of those conspiracy nuts that's saying that they yeah. Where is it, Nick? Where's the where is it inside here? No. Trusted brokers. Mate, who is that? Alright? Who is that? I don't know who that is. Hey. Oh, this is being... It's a good looking rooster. It's being blocked by... it's getting blocked by ad blocker. But yeah, so they do offer one-to-one analyst sort of mentoring. That's sort of what I do with the traders. Try to teach them a bit, give them up to date, and monitor accounts in case they're doing something crazy. Give the second eyes and ears. I'm like the risk manager a little bit. If you're a good trader, I'm your risk manager. If I'm your bad trader, I'm your mentor. If you're a new trader as well, I'll be your teacher. But you better deposit a lot if you want me to teach you, because I've taught like 1,000 people and I just don't want to do it. What is the bid and the ask? What is the buy and sell order? What's resistance? What is support? Nah, it's not that bad, but it can be tiresome sometimes. It's much easier to get a lot of benefit out of a Forex analyst or a dealer in general, or someone else that is a good trader, even like a mentor, if you're very savvy already. If you get to that stage where you you know everything about the market, you're just not making money, right? From that position, it's much easier to start teaching someone, because it's usually like 3 or 4 things that they're doing wrong. That's very common. You know, like take for example, if you think that chart is a good opportunity to sell, if you think this is a good opportunity to sell, you're probably still losing money. Right? If you're looking at that thinking, "Ooh, I'd like to go up here so I could sell off that level. Maybe pull all the way back down here." Yeah, I mean, you're probably losing money, because it's just, that's not the way to look at that chart. You should be looking at the chart and going, "Oh wow, that's strong. Broke up here. Where's the big resistance? All the way up here." You know, you should be looking to the top side, not the downside. Yeah, I'm in the heart of the CBD here in I'm in the heart of the CBD here of Sydney. So I don't know. No, it's not a terrorist attack. But they don't need to blast their horns just to get home at night, alright? That's what I think they're doing. You know, I'm pretty sure they're just on their way home. They're dropping everyone off. It's not like there's fires every day in the city as well, so you hear them every day, and it's like, well, where are they going? What are they doing? They're the well-trained fire brigade unit in the world. No, I'm harsh on them. Aren't I? Alright, so yeah, I mean, you should be looking at this chart thinking it's a great opportunity to buy something at some point, maybe buying off this level. And if you're looking at it thinking it's close to selling, it must be overbought, then you're just thinking about the market fundamentally wrong. We might finish with a little update here on the technicals. The positioning on the pound's getting incredibly short, guys. Another reason to be careful on this selling that pound yen. It's probably going lower, but there's going to be these bouts of heavy profit taking. That's what you need to worry about. Alright, so I don't think these charts have changed much, especially the euro. Like, we can't trust this euro, really. I mean, that big level that we're looking for is that 112.50, 112.60, it looks like here, which happens to be a fib number. You know, it's well contained, right? So there's a lot of people looking to sell rallies. That means that the price action as well has encouraged buyers to take profit early. So really, I think, you know, we really need that something to help the market break higher so we can get some momentum here. And that would really help, because if the euro can go higher, it can help everything else. We're just not getting that here. There's been arguments made that this was not going below 100. I think the burden of the proof is on the dollar yen bulls here to hold it above 100. Very interesting next couple of weeks how this pans out. How this pans out means whether we're going to be buying Aussie yen, or we're going to be buying Aussie against the US. Yeah, both have got potential. It's whether this one can hold 100 or not, is whether we buy Aussie yen. And if it breaks, then we're buying Aussie US. Yeah, pound, they're just making up the supports here, because they don't know. Apart from that 128 level, these are all just made up. So we've seen this before. What is this 127.52 level? Which they say is double important. It's the 78% retracement of the entire bull market from 1985. No one else is looking at that level apart from, Credit Suisse. It's an incredible stretch to think that the people have placed orders there because it's the 78% retracement of the 1985 low. I don't know anyone who trades off the decades chart, right? So they're really stretching to find supports in the pound. So the Aussie has rolled over here, but we're looking to buy that next leg lower. I think that'd be enough. Could get good support. So the level I'm looking at 75.80 to 75.50, and as long as it doesn't go below 75, I'm happy. We're targeting 78.50 on that next pullback lower. But we are waiting for that next pullback and for the market to find solid support. Kiwi is likely to test lower here as well, just because it's rolling with the Aussie. Now dollar CAD, it's doing its own thing because the oil is moving, but you can't ignore what's going on with the Aussie and the Kiwi, and we are getting a little bit of rally here. Not much though, actually. It's rolling over again. I mean, we're short. This is our only full-size position in the market right now, is short dollar CAD. Okay, but got to keep an eye on oil, make sure it doesn't do any funny business. So far it's okay, but it's a sneaky one, oil. And this is supporting. So as long as we remain, pretty strong here, dollar CAD's going low. Okay, euro pound. I know some of you trade that, and it is one of my favorites. And it is breaking my heart that it's up here, but I haven't sold any yet, so I'm not at war with it yet. Okay, so look, let's see how high we can go before we try and sell it. I want to see some sort of basing in the pound or a reason to buy the pound before I involve myself in this particular pair. So it is one of my favorite pairs. I'm just respecting the top side now, and I'm not buying up here. Same reason I'm not selling pound. So ideally we get a pound collapse that's 1 or 2 days long, and it finds resistance around the 90 level. That would be fantastic. I would be selling at 90 and holding. Over time we should move back down. Okay, but I don't know. It might be a slow burn up. It's a pretty slow burn at the moment. But there's nothing wrong with putting some limit orders up there at 89.50. Alright guys, that's enough for today. That's a bit of a long one. We didn't look at any of the trades but in the trading room, but we will tomorrow. We will tomorrow, and I'll have everything back up and running earlier. So we will start at 9 GMT, guys. A little late today, but 9 GMT tomorrow. If you do want me to look at a specific chart, send me a PM during the day before 8 GMT, and I should be able to help you out, okay? We'll spend 5 minutes on it, looking at the fundamentals and the technicals on that particular pair that you're looking at. Alright guys, good luck with your trading. Interesting markets, not clear at all on any pair, but there is potential here. I'm a US dollar bear, and I'm looking for that to be the case and be confirmed before I get aggressive. Alright guys, trade safe.